All right. What is up, tycoons? What's up, traders? Coming at you guys with another viewer request. We're going to look at Baby Doge today, okay? Ticker symbol Baby Doge. Looking at things on the daily time frame as always. We're going to go over some of the possible structures that we have. If this chart looks complicated to you guys, don't worry. It's actually super simple. There's literally only two strategies that I'm using on this chart, and I'm going to break it down for you guys so simply that you can understand and really give yourself an edge when it comes to understanding price action and why things move up and move down. Now, we're also going to take a look at the MACD. This is very useful for spotting potential entries and exits. All right. So make sure to smash that like button, subscribe to the channel if you guys are new. Before we go any further, we're going to read a quick disclaimer. The content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors. Trading in stocks, bonds, commodities, and cryptocurrency involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. We're going to go ahead and hop into the charts now. And real quick, okay, the first thing I want to start off with, if you're not familiar, markets like to move in 3-wave and 5-wave structures. Now, I'm not going to dive too deep into Elliott wave, but just kind of know and understand that simple concept that, you typically see a 3-wave structure or a 5-wave structure. And so you can have micro counts and macro counts. So you can have smaller 3 and 5-wave structures inside of a larger 3 or 5-wave structure. Okay. Now that we got that out the way, I quickly want to break down a couple things to you. Now, if you notice, I have these sets of 3 yellow lines right here. Okay. What these are is these are the 3 most common and well-respected Fibonacci retracement levels. Now, the reason you use the Fibonacci retracements is because nothing moves in a straight line down or in a straight line up. Rather, you get a move down, a retracement, and a continuation of that trend, or a move up, retracement, and a continuation of that trend, right? And so if you take a look, we had this really, really big rally. Okay, and we've started a downtrend since then. We had a big move down, which would be our A wave, right? So about one of three. And what we have here is our 3 major retracement levels to the upside. So what that means is that all of this move to the upside is within healthy retracement territory to continue the downtrend. Now, just because you have a downtrend doesn't mean that you can't get a reversal. So if you move down, you retrace and consolidate and break through those retracement levels. That's how you can spot a potential upside reversal, right? And same thing with the other side, right? If you move up, retrace, consolidate, and break through those retracement levels, you can spot a downside reversal. So if you take a look, we had this very strong move to the downside. And since March, we've had a really strong recovery. And look at exactly where we topped out, guys. We topped out at our 61.8% retracement level, which is a big warning sign, right? Saying that, hey, we weren't able to get above this level. If we get above our 61.8% level and we can flip that from support to resistance, then we can be bullish above there and potentially hit our bullish price targets or retest some of our previous highs. All right. Now, it's very important that we actually rejected our 61.8% level here and actually started continuing lower. That's a little bit of a red flag. All right. Now, on top of that, we also have our MACD here flashing a red flag as well. So the way you use the MACD is you want to pay attention to this red line here. And when it crosses below, that's typically known as an exit signal. And so you can see we had an exit signal at this period of time. All right. And we ended up seeing a large move to the downside afterwards. Okay. And so if you look at what we're seeing right now, we have the red line crossing below the yellow line here. Okay. And this happened right up in this time period. And we've had a pullback, but it's a potential sign that we could have a strong pullback back down to these previous levels. Okay. Now, if we zoom in a little bit, we can see here that we've done a really good job actually of holding our retracement levels to the upside and getting that trend continuation on a more micro count, right? So we saw the bigger macro scale. We had a big move down and then a big retracement up, right, on the macro scale. But on the micro, when we zoom in, we could potentially be getting a 1, 2, 3, 4, 5 bullish structure to break us out above that 61.8% level. If you take a look, we had a wave 1 up, we got a wave 2 retracement, and look at where we held support, guys, right at our 61.8% retracement level. And we continued that uptrend, and we hit our wave 3 extensions above the 1.0 extension right here. That's what these white lines are. And if we do a good job of maintaining our support levels here on this wave 4, which we've hit our wave 4 targets, if we push up to wave 5, that's going to take us up here on the chart, and that's going to be above our 61.8% level. And if we do that, then we have a chance of being bullish above here and potentially hitting the bullish price targets to the upside. Now, there's a lot of work to be done before that happens, okay? And as I mentioned, there are some warning signs that we need to be cautious of, right? It's not a time to be overly bullish right now. It's a time to wait for things to develop, okay? You don't want to go super long here, and then you see the MACD continue to trend lower, create more space away from that yellow line and get down below zero. That's going to be a bad sign for you, okay? A sign that, bearish momentum is very strong. Right. But if we can see this red line cross back above the yellow line, then that's going to be a potential entry signal, right? And that could signify our wave 5 move to the upside to potentially take out these new highs that we created. If you take a look, we're putting in a high, then a higher high, then a higher high, then a higher high. We're putting in a low, then a higher low, then a higher low, then a higher low. So we are in a short-term uptrend since the year has started, and really since March, right? If you take a look, this is March right here, and you can see we've been in this uptrend since March, and creating these higher highs and higher lows. So if that's going to be sustainable, it is very possible that we could get above our major retracement level here. And if we can flip this area to support from resistance, that's when we have the ultimate chance of hitting these bullish price targets to the upside, guys. So, when it comes to Baby Doge, these are the major things that I see. Now, this is our breakdown level, this blue line right here, okay? So ultimately, if we do end up breaking below this level here, all right, then we do have that strong chance of seeing the ABC correction on the much more macro scale, bringing us down to the price targets over here that we see in retesting some of our previous lows in this area. As you can see, there's a lot of support and resistance right in this area. If we break below there, it's going to take us back down, most likely to this area here, which is pretty far away, right? There's a lot of work to be done. I'm not saying that any of this would happen overnight, but these are just some things that you want to keep in mind, right? If you take a look, these are some pretty significant drops to the downside. So I want you guys to be prepared for all scenarios, okay? I'm not here to blindly tell you guys to buy into something that it's going to go to the moon. I'm not much of a shill, okay? I'm not trying to shill my own courses. I'm not trying to shill my Discord or anything like that. Really just trying to give you guys some unbiased, honest, and technical analysis and hopefully teach you guys something along the way. Now, if you learned anything in this video, I'd really appreciate it if you smash that like button and subscribe to the channel. It really helps out being such a small YouTube channel. And most likely you're honestly going to enjoy one of these next 2 videos as well. So I really appreciate you making it this far. Click on one of those if that's an interest to you, and you'll probably enjoy that video as well.